Yo, yo, yo. Welcome back to the channel. Hey, before I start the video, make sure you like the video if you like the video. And comment your thoughts down below as I'm going through the video. If you think of anything relevant that you want to comment, ask a question about, anything like that, make sure you share that down below. I kind of want to see how YouTube reacts to certain kinds of comments. So rather than just like a bump comment, which I appreciate you guys for doing, um, make it something that's like meaningful and has to do with the video if you can. I appreciate it. And obviously watching until the end helps us significantly in the YouTube algorithm because that's what YouTube wants is watch time. Screen time is where they make their money. So with that being said, let's jump right into it. So a few days ago, I made a quick update. That was on the 13th. And in that update, I was particularly bearish on SPY. I started to come around to being bearish on the status of the chart. And I should have been a little bit more specific in saying, because whenever I was coming here, we were probably in this section of the chart, which would have been in the, let's just say, 377 territory, right? And the reason that I'm saying I should have been more specific is because in reality, SPY was actually really in no man's land. Okay, so we didn't have this line on the chart that you're seeing here, so it looked like this, and SPY was kind of just sitting in between this long-term support trend that we've been looking at in green, and then down below these resistance trends, particularly below this resistance trend that we had on the chart previously. Okay, and it being in no man's land in that fashion does mean intrinsically that I don't really have too much conviction as to either direction, right? So the following day, what happened was SPY gapped down in pre-market, and then since then you've had this big rocket up. Obviously, just looking at the chart here, you found a level of support in this liquidity zone, and very likely also a Fibonacci level. As you can see, the 707, which is the Fibonacci level that we brought up the other day. And I was talking about this in my Discord earlier, but what I should have been doing is I should have been paying more attention to my higher conviction. And my higher conviction was with Bitcoin at $19,000 level, right? So let's pull. Hold on one second. What is this? What is this display that I'm getting here on TradingView? What, dude? Why is it doing this? All right, let's just pull it up this way. That's weird. And if you remember, towards the end of my video on the 13th, one thing that I said was, I'm looking for the bounce on Bitcoin at 19,000. Now, it didn't bounce right at 19,000 or right at this 19,077, which was a 0.707 Fibonacci level, which is the one that I said, to be looking out for. But you got to bounce just below 19,000 at 18,923. And then since then you've had this big rally, and I was pretty sure about that, especially afterwards. Not so much in that video, but afterwards, whenever I looked at it, that's what I was really sure about. And since I wasn't as sure about where SPY was going to be headed, I should have used my conviction on that level for Bitcoin as support, to support my thesis when it comes to SPY actually having the ability to have upwards momentum. At the time, I just thought that the momentum looked like it wanted to search down and retest this bottom, the bottom of this channel here, or this bottom trend line. So now what's occurring, I think, is what you're going to end up seeing most likely is that this ends up being a retracement, and I'll show you what I mean by that. Yeah, I mean, here you look like you have a double tap here, and you're actually up fighting above this this yellow trend line. What I would do is pull the Fibonacci from here, and then you can see here that right now you're facing the resistance of this 707 Fibonacci. I'm telling you, okay, the 707 in these market conditions, right? So for the past few weeks, months, the 707 has been the key liquidity area. If there is a relevant trading zone there, if you've seen a big breakdown or something, the 707 is always a key level of resistance or support. So just make a note of that. It doesn't mean that it's 100% of the time going to be what causes a stop in price action. But I mean, just in this video, you've seen a few examples of it working, right? So just make sure you're adding that to your Fibonacci and paying attention to it. I mean, I will say that volume overall looks, it's pretty low overall in the recent trading range, but it does look healthy for bulls here overall. What I would probably be expecting in the short term, though, is maybe some sort of rejection. This ends up being a bull trap, in my opinion. And then maybe you work your way back down here to the 375 to 376-ish level. So this golden range here is where I would kind of expect some sort of retracement to occur, unless it ends up finding support here and then fighting up to this red trend. I would say that this would be a very extended move, though, if you did continue upwards in this manner. Let me get my drawing tool, sorry. Brush will work. If you extended upwards in this manner and use this as support, I would really be expecting a push down here. That's just going to be very weak considering this volume. You need a lot more volume to support that sort of move. I would be very surprised if you just busted right through that red trend, right? We can take a look at AMC, our favorite meme stock that we've been following. Oh, I just accidentally painted on the chart. You can see that AMC, since breaking out of this rising wedge that we were charting the other day, is following this little downtrend. It didn't really explode downwards in the fashion that I was really thinking that it would. It's really held this 1475-ish level as support, this previous liquidity range. So it is holding up relatively strong. You can tell that you're sort of flagging here as well. Perhaps what you'll be looking for is some sort of wedging action to be occurring towards the end here. You're really not getting a lot of volume here to get you pushed through, so I do expect one more retracement, maybe down to this 1460 for a bear trap, I'm sorry, and then perhaps you could see a breakout. It really just depends on what happens when you retest this level, right? So let's see right here. Right, if you come down, you get rejected here, you come down and test this 1460, it's really going to matter what happens again at this 1475. If you flip and then create and then hold it as resistance, then you're going to see that extended move down that we were expecting before. But if you can hold that as support, right, you can regain it as support, then you really could see higher highs on this 1608 level. And start pushing into the deeper Fibonacci territories that we've discussed before. Let me just draw those out so that we have them on hand. And obviously you're looking for key liquidity zones when you're doing this as well. But yeah, I mean, you definitely could push right back up into this $19 territory, and then obviously as you're probably going to retrace from there. So what that would probably look like is we would pull this as our local bottom up to this 1909, and then that's how you start to generate that market structure move. You'll retrace down to maybe this $16 level, and then you can try and push through again and see this $22. And obviously this can happen a little bit quicker as well and create a more volatile move, especially if you really explode up with some good volume. It can get pretty vertical in that fashion after you get done with your retraces. It just depends on that general motion. But I will say that for the past few weeks, we've been overall bullish on AMC. And when bearish, we've just been bearish in the context of we just need to retrace a little. We're starting to see momentum slow down. Let's retrace, and then we can gear up for another move upwards. I really don't see any reason why. I mean, this looks like a really healthy retracement. It looks like you're battling here for bulls. Maybe you come back down, refuel on this 1475, and then you get a move back up. On the more bearish sense, as I said before, if you fail that 1475 on that test, and then you come back and retest it as resistance, right, in this fashion, and you fail and you get a lower low, then you'll start to have a conversation about how you're going to push down, perhaps down to this 13-ish level at this point, and then that would be when you try and see for another bullish rally. But as of right now, I don't think anybody would be trying to make the case right now that you're going to be seeing lower lows or anything. This looks really accumulative. I don't think that there's any reason to say, hey, you're going to go lower than this 970 at this point. I think that most people who are playing AMC are going to be playing it short-term puts, looking for these more shallow retraces and playing the long side a little bit more aggressively. So yeah, that's pretty much it. We can take a brief look at Bitcoin again. I am not understanding. Okay, create new layout. That's the new way that you look for a new tab. I use my phone most of the time. If you didn't know that already, if you're back to the channel, you definitely know that. All right, let's pull up the KuCoin chart. Let's see. All right, so still feel pretty much the same way about Bitcoin. For some reason, I cannot scroll my screen. All right. So pretty much feel the same way about Bitcoin. I do just, I feel overall that Bitcoin is due to come up and test this $28,000 level. I think that if you're looking at, liquidity, you just sold right through this region of the chart, right, from 21,000 down to from 28,000 all the way down to 17,000 or so. I think that it just makes sense for you to come back up, retest 28,000. Ironically, that's your 707 level as well, and then see where you're at from there. So I am overall on a macro view, even if over the weekend you see a little bit of dumpiness. I do expect that you would test 28,000 before you create a lower low on this 17.6K. And then from there, we'll be able to tell a little bit more. You do still have some room on the liquidity side up above here as well. If you break above this 32,000, you do have a pretty good room here to move to like 37,000 or so if you really get that bullish volume coming in to support you above 32,000 or so, right? So that would be your new trading range at that point. To go back into price discovery, try and find that 37,000. If that were to occur, perhaps it would look something like this. And then you would come back, retest here, and then you would briefly pop up there. It would probably turn into distribution at that point, and then you get sent back down into these 20s again. I do think that you're going to spend some time trading here, but I do think that there's a possibility that's similar to how you just came up and you tested this $48,000 region, and then you got distributed down. You could come up, test this $37,000 region, and then get distributed down in a similar fashion. So that's Bitcoin, that's SPY. That's AMC. Brief look at the market. Yesterday was my birthday. Had a good day. Went out to the city, ate some sushi, had some drinks, things like that. But yeah, so now going into the weekend, gonna chill out, relax with the kids, with the family, things like that. So hopefully you have a good weekend with your family. Hopefully you gain something from this video. Again, if you haven't already, make sure you like, subscribe, and comment your thoughts on the video. Hopefully I shared something interesting with you. Make sure you join the Discord down below, completely free. Follow me on Twitter to stay up to date with what I'm thinking throughout the day outside of these videos. And yeah, until next time, peace.